I am then going to share my screen with you guys. Yes. Okay, awesome stuff. Right, so you should be able to see my screen right about now. Okay. Welcome to those who just joined us. Jasmine asked a question there earlier. Are we going to be using the remaining sessions to revise? The answer to that question is yes. The remaining sessions we are going to be using to revise. So if you guys have certain sections that are challenging or that you can't really make sense of, or you don't know what's going on, please tell them to me, and then obviously we can then figure out how to address those concerns and make sure that we're ready for the exam. That said, well done to you guys. I was thoroughly impressed with how you handled your test 2. I think everybody passed except for maybe one or two. Right? Maximum three people didn't pass. All right, I think I may be mixing that up with your maths. Where there, I know for sure it's only 3 people that didn't pass, but even then there was like 48% was the failure. So people were failing by 1 mark. If they had just gotten 1 mark correct, they would have passed. So again, well done to you guys. Let's keep it up. Let's keep pushing, and I am sure that we will all do very, very well. Okay, that said, let's get into 2015. Okay, so as always, I will not be revising the theory questions with you. Okay, I will not be revising the theory questions with you. But again, as you can see, if you want to get a distinction, which for a lot of you, that is a very strong possibility, okay, you do need to have gone through and mastered your theory, okay? So I'm sure you guys are looking at question 1 now as we speak. We are just going to run through them or run through it. You see there it says 2 disciplines of accounting that exist are management accounting and financial accounting. Contrast these 2 main disciplines, branches of accounting. Okay, so in other words, explain the difference between the 2. Okay, and that's for 5 marks. Okay, you can find this out in your textbook. You guys had a question on this, they could very well bring it again. They love this management accounting and financial accounting. Then the next question, they say quantitative characteristics of financial statements prepared in accordance with IFRS include understandability and reliability. Briefly discuss 2 characteristics. So can you see they've already highlighted understandability and reliability. So you then need to speak to relevance, you need to speak to timeliness, you need to speak to the others. I think there's 1 or 2 others. I'm just forgetting which one it is. Comparability is another one. I don't know if I mentioned that one. Understandability, they mentioned. Okay, but those again are in your textbook. All right, and then various users of accounting information use it for different purposes. The general public is one such user of business accounting information. Name 5 other users of accounting information. So in other words, you can't mention the general public again. You have to mention suppliers, customers, creditors, or should I say lenders, sorry. You need to mention all those other ones, okay? So do take note of that. Do take note of that, okay? Usually they do like to ask that question as well, but they like to ask it in the same way that they've asked it there, to say investors are a type of user of business accounting information. Which others are they? Okay, so you can't mention investors again. There's no mark there if you mention investors again. Okay, right, cool, guys. And at any point, okay, good question. I submitted your marks. Sorry, Oliver, are you talking in relation to your maths or accounting? I'm assuming you're talking to accounting, right? Both. Okay, so I submitted both of your marks last week. So if we had a class session, I could have shown you guys your marks, but obviously since we're online, I can't display the marks or share them with you. So yeah, you should get them before the end of this week. Since it's already Wednesday, you should get them before the end of this week. Okay, but yeah, again, you guys did really well. I was quite happy with the marks. So yeah, you can pat yourselves on the back. All right, cool. So let's proceed to question 2. Okay, and guys, please interact with me. Tell me if there's something you don't understand. Tell me if there's something you just like to mention. A comment is more than welcome. On the chat, again, guys, I might not hear the chat go off, so please feel free to switch on your mic and interrupt me by all means. Okay, so question 2, what's going on with question 2? Question 2, they're saying calculate the total. I'm reading the required, right? It says right at the end of the question, it says calculate the total liabilities as at 28 February 2015. Show all account names and figures in your calculations. Okay, right. So they want us to calculate total liabilities. Then question 2.2, they say calculate the total assets as at 28 February 2015. Show all account names and figures in your calculation. So they want total assets there. And then finally, calculate total income as at 28 February 2015. Show all accounts, names, and figures in your calculation. Guys, I mentioned this the last time when we revised test 1. I need you guys to actually write the names of the accounts. Okay, so here they wanted us to do total liabilities. Okay, so let me quickly go to the question paper. Go to question 2. There we are. So what I want you guys to do is on each of these, let's see, can I edit this document? Is it possible? Okay, fortunately I can. So I want you guys, when you get a question like this, you know that you're calculating your total income, your total liabilities, total assets. You must come here and say SARS, output vat. This we know is a liability. Furniture, we know it's a non-current asset, okay? All right, interest on fixed deposits. Here we're talking about the interest on the deposit, okay? We know this is an income. Yes.
Do we have to specify, because it doesn't really say, it just says asset. Do we have to specify if it's non-current or current?
No, you don't have to specify, particularly for this question. But I'm just doing it because they might actually ask you to calculate non-current assets, current assets, non-current liabilities, current liabilities. So just for good practice. But yes, for this specific question, you don't need to do that. So here you could just say assets. Stationery would be an expense. Sorry. And so forth, so forth. Okay, this will just save you some time so that you obviously then, when you now want to obviously calculate what they've requested you to calculate, it's very easy because you know you have all your assets listed, all your expenses, your incomes listed, and your liabilities. All right, cool. All right, so yeah, if they just ask the question like they did here, you don't necessarily need to specify. You could just keep it broad in terms of whether it's a liability or non-current liability. You could just say liability. All right, cool. So here you can see, first one, they wanted us to do our liability. So you have output VAT there. We plug in the amount. Bank loan, plug in the amount. Then this was bank overdraft. You plug in the amount. Again, don't abbreviate like teacher. Teacher is the only one allowed to abbreviate, okay? And then creditors control, you plug in the amount. And then for some reason, teacher here did not do the total, okay? But we all know how to plus and minus. You guys showed me that in your maths test. So you should be just fine, okay? Remember, there is a mark over here for just listing the account name. So please, guys, please, I beg you, even if they don't say it in the question, please make sure you do it. Because if you make a mistake over here, at least I can try give you a mark here, if there is a mark. If you don't give me the right account, but you give me the amount and it's wrong, then there's nothing there for you, okay? Which would be sad, okay? Right, so then here we're doing our assets. We have furniture, fixed deposit, we have land and buildings, we have inventory, and we have cash float. Add it all up and we get our answer. Then last one, here we were doing, what was it? Income. All right, remember, interest on fixed deposit, that is the interest on the deposit. All right, interest is an income, okay? Well, this interest is an income, okay? Because we're getting interest on our investment, which is a fixed deposit. Okay, so you plug that in. Dividends, plug that in. Sales, why is stationary here? Ooh, that's a problem. Okay. Okay, so this is stationary consumed. So yes, it. Wait, what did they ask us here? They asked us to calculate total income. Yeah, so total income, we were just supposed to add all the income. So I don't know why teacher decided to minus the expenses. Okay, so don't worry. There you weren't supposed to put stationery, cost of sales, or postage. Ignore those three. Okay, this is why I call them the suggested answers. Okay, right. There's some few other mistakes that I also made in the paper, but I will be mentioning them as I go. So you'll be just fine. Okay, so that's your question 2. We then move on to question 3. Okay, accounting equation. Let's see what they were asking us there in question 3. Okay, I just want to cover it up whilst we read the question. So under the required, it says, show the double entry as well as the effect on the accounting equation for each transaction in the columns provided. Ensure that you use the plus and minus signs to show the effect on the equation. Nothing brand new. We've done so many accounting equations. You guys should not have any problems here. So anyway, let's read up top what is going on over there. I'm just putting on my jacket if you guys are wondering what's that funny sound. As you guys know, it is winter. It's cold, guys. It's cold out here. All right, cool. It says the following transactions apply to Bell Traders for February 2015. Ignore VAT for all transactions. The business uses the perpetual stock method for the recording of transactions. You are required to analyze these transactions in the format of the table provided. See example below. Guys, please, I beg you all, please make sure that you follow that structure. Okay, some of you were following other structures, all right, and I can't give marks even if you're doing the right stuff. Okay, so please make sure that you follow the structure provided. Okay, follow that example. All right, so transactions for the month. The owner took a couch from the business for his personal use to the value of 9,000. Okay, so somebody tell me, which accounts are we debiting? Which accounts are we crediting in this regard. The owner took a couch for his personal use. What are we going to debit? What are we going to credit? Okay, which account are we going to debit? Which one are we going to credit? Somebody talk to me. Okay. Okay, so yes, I agree with you, Oliver. We are debiting drawings, but then why are we crediting trading inventory? Do we sell and buy couches?
So isn't it because it's an asset and it's decreasing? It's therefore
Yes.
going on the credit side and not on the debit side, because you're not increasing.
That's correct, but that is correct. But is it trading inventory? Is furniture trading inventory?
Oh, so it's stock. Oh, under furniture.
Aha, it should be under furniture, okay?
Yeah. Okay.
It should be under furniture. Awesome stuff. Thank you for that, Oliver. Okay, so let's look there. And there you can see we debited drawings and we credited furniture. Then under assets, obviously, because assets is going down, as was highlighted by Oliver, we have a negative 9,000 over there. All right. Owner's equity is decreasing because we know drawings reduces owner's equity. Okay. So cool. That's how we treat the first transaction. We move over to the second transaction. It says services rendered to cash customers, 2,500. Okay. So this is obviously services rendered. Okay. And what else? Sales. Oh, sorry, services rendered and bank. Why am I saying sales? Services rendered and bank. Okay. So what are we debiting? What are we crediting? Somebody tell me there in the chat. Services rendered and bank is going to be affected. What are we debiting? What are we crediting for that second transaction? Guys, talk to your lecturer, talk to teacher. Yes, we are debiting bank and we are crediting services rendered. Thank you, Oliver, for that. Let's see. Okay, so assets is going to increase, so we have a positive there because our bank account is increasing. We've received money. Okay, owner's equity is also increasing because income increases owner's equity. All right, awesome stuff. Let's proceed. Oh. Okay. Next transaction, purchase fuel for delivery vehicle from petty cash, 900 Rand. We have purchased fuel for the delivery van from the petty cash. Okay. So we know fuel is going to be affected and petty cash is going to be affected. Petty cash again is an asset and is decreasing. So we're going to credit petty cash and we're going to debit fuel, which we know is an expense. Okay. And there you can see assets is going down because petty cash is reducing. We're spending money out of the petty cash. Okay, so negative 900 there. And then finally, we have a negative 900 under owner's equity. Okay, because we know expenses reduce owner's equity. Okay. Second last transaction, paid interest on a loan to TG Bank, 500 Rand. So this is interest paid or interest expense, okay? And then what's the other account that's affected? Bank, because money is leaving us, okay? Interest expense or interest paid, and then finally bank. What are we debiting? What are we crediting? Somebody tell me, what are we debiting and what are we crediting? Somebody tell me there in the chat. What are we debiting between interest paid or interest expense and what are we crediting between interest expense and bank. Okay, any thoughts? Going once, going twice? God. Okay, so yes, we're crediting bank 100%. That's correct, Oliver. We are crediting bank, okay, and therefore we are going to then be debiting interest expense. Okay, so then negative 500 under bank, under assets, because bank is an asset and we're losing money in this case. Then a negative 500 under owner's equity because interest expense is decreasing. It's decreasing. Okay, cool. Let's move forward. So last transaction there, it says received a loan from ZM Bank, 43,000. Okay. When we receive a loan, that means that we are getting money. Okay, so our bank account is going to increase, but also our liabilities is also going to increase. So bank loan is also going to increase. What are we debiting? We're going to debit bank because it's increasing, and we're going to credit our bank loan because it's a liability and it's also increasing. Okay, and that is exactly how we do it. Can you see? Bank, debit, bank loan, credit, and then you can see under assets, since our bank account is increasing by 43,000, it's going to be a positive, and our liabilities is also increasing by 43,000, it's going to also be a positive. Okay, and that, ladies and gentlemen, is your question 3. All right, so here they were a bit stingy. They only gave you guys 10 marks, but usually this will go for 20, 25, maximum, 30 marks maximum, but usually 20 or 25 marks. Okay, right. So let's proceed to question 4. Let's proceed to question 4. Okay, and this is the last question that we'll do before I give you guys a break. Yes. This is the last question that we'll do before I give you a break. Okay, so in question 4, what is going on over there? If you look at the questions being asked, so question 4.1, it says, would ABC stores record the VAT that applies to ZB stores as input or output VAT? Okay. Question 4.2 says, would ABC stores record the VAT that applies to Joe Smith as input or output? All right. Then question 4.3 says, what is the total output VAT for the business? The total output VAT for the business. Okay, so we need to calculate that. Question 4.4 says, what categories include standard rated, zero rated, exempt, and non-allowable VAT items? Sorry, it says VAT categories include standard rated, zero rated, exempt, and non-allowable VAT items. What would petrol categorize as? Okay, you guys should already know the answer to that. Then question 4.5, what is the total input VAT for A, B, C stores? Okay, and then finally, what does the cost of sales amount to? Ooh, interesting. Okay, so let's quickly read the top of the question, and then we will then jump into answering this question. Okay, it says you own a company called ABC Stores. The business is registered for VAT and trades only with other registered VAT businesses. The business charges 14% VAT on all its sales. all amounts are inclusive of VAT unless VAT is not applicable or stated otherwise. So obviously we are operating on 15% VAT, or you guys should. The suggested answers will be on 14, but please do your calculations on 15 because that is what you'll be examined for. We should have communicated that in the past, but oh well. Right, moving right along. It goes on to also say inventory. Oh, sorry, I skipped. Your business purchases products from various suppliers, including ZB stores. Your business has various customers, including Joe Smith. Okay, so Joe Smith is a customer, ZB stores is a supplier. Consider the following scenario for the month from a perspective of your own business. Inventory was purchased from ZB stores on account. In other words, it was purchased on credit. On account, remember, is on credit. 13,615 inclusive of that. Okay. Inventory was sold to Joe Smith on account. 15,000 exclusive. Okay. So we sold some inventory there to our customer, Joe Smith. Okay. Markup on cost is 100%. All right. Payments for the month were recorded as follows: petrol 2,280, advertising 7,980 inclusive of VAT, entertainment cost 3,420 inclusive of VAT. All right, awesome stuff. Cool. So first question: would ABC stores record the VAT that applies to ZB stores as input or output? Remember, ZB stores is a supplier. What type of VAT is that? What type of VAT is that? ZB stores is a supplier. So what type of VAT would that be? Is it input or is it output? Somebody tell me there in the chat. Is it input or output? Thank you, Letabo. It is input VAT, 100% correct. It is input VAT. All right, then it goes on to say, would ABC stores record the VAT that applies to Joe Smith as input or output? All right, thank you, Jasmine, as well. Yes, that is input. Okay, but now let's move on to Joe Smith. It is output. Okay, it is output. All right, thank you, Oliver, for that. It is output. Then we move on to 4.3. What is the total output for the business? Okay, and this is why I wanted you guys to have the question paper in front of you so that you can obviously see these things. Okay, suggested answers, I didn't answer that. Okay, but this is a question worth going through because obviously, you know, VAT is always a very important topic, and they will definitely be testing you on your VAT in one way, shape, or form. So, what is the total output VAT? First thing you want to do here is you want to establish where is output VAT applicable. All right, the only place where we are selling something or producing something is with Joe Smith. So that 15,000 exclusive of VAT is the only amount where we'll be actually incurring or generating output VAT that is then going to be owed to SARS. So what now must happen? We then now need to say, and I'm going to do this in the chat because I don't think I have my thing open. Just load it in the meantime, in case we stumble on some other calculations. So here, what we're going to do is we're going to say 15 divided by 100 times this 15,000 because it's exclusive of that. And somebody tell me, what answer do we get? What answer do we get? What answer do we get over there? Please just post it in the chat. Okay, we get 2,250. Thank you, TK. Thank you, Lebohang. Thank you very much for that. Okay, so we have that. We can then move on to the next one. And guys, please, please do inform me. All right, what would petrol categorize as? What VAT category or what VAT type does it fall under? Petrol. And we know that all the fuels fall under the same category. So paraffin, diesel, you name it, all of them. All right. Thank you very much, Oliver. That is 100% correct. It is 0 rated. Okay. Then they ask us, what is the total input VAT for ABC stores? Okay. So we have to ask ourselves, where do we incur input VAT? Where do we incur input VAT? Somebody tell me in the chat, where are we incurring input VAT? I think somebody did earlier mention, I believe it may have been Oliver, not so sure. I'm getting old. We did mention that ZB Stores is a supplier and we would have input VAT on that. So yes, that inventory bought, that 13,000 and advertising. Is there anything else? Anything else? Or is it just those two? You know, petrol is 0 rated, so that we shouldn't include. Should we include entertainment costs? Yes or no? And if not, what VAT category does it fall under? Okay. We've established that we're going to include inventory and we're going to include advertisement. Are we going to include entertainment cost? Yes, no, maybe? Thank you very much, Kate Kani. We are definitely not. All right, so thank you, Oliver. Thank you, Kate Kani. We are definitely not including entertainment. What VAT category is entertainment, guys? This is in your textbooks. What VAT category is entertainment? Yes, it is non-allowable. Non-allowable. Thank you very much, Kate Kani. Thank you very much, Oliver. Last question, and I'm going to give you guys your break. What does the cost of sales amount to? Ooh, so this one was a bit tricky. Okay, you needed to work for your marks. How do we calculate cost of sales here? How do we calculate cost of sales? Do, 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 do. Okay. The table, so what does that give you? Let's see your calculation at work. Please calculate it. Okay, guys, very important. Please calculate it. I want to see. What is our cost of sales? And the table, very interesting formula there. I haven't seen it before. Okay. You're asking me if you are out of reach. I'm asking you to calculate so I can see if your answer matches mine. You guys, if you're going to bring a different formula from what I've taught you, you need to have already practiced it and seen that it works and gets you to the correct answer. So you should be telling me how you use this formula. Yes, we're doing all our VAT calculations on 15%. That's correct. But at this particular point in time, do we need to be calculating VAT? What amounts are we going to include in our cost of sales? Maybe let's start there. What amounts are we going to be including in our cost of sales? We have the inventory that we bought from our suppliers, ZB stores. We have the inventory sold on account for 15,000, exclusive of that. We know that the markup on cost is 100%. That should be something that should also give us some guidance. Okay, then we have petrol, we have advertising, we have entertainment costs. What are we including, or what are we going to be using to calculate our cost of sales? Come, guys, I want to give you guys a break. This is the last question before I give you guys a break. Okay, guys. So can you see when I told you that the very first lecture, we need to what happened, Litabo? You had the formula and now you're lost. What happened? We need to understand first and foremost. Once we understand, then we need to master. Once we've mastered, then we need to apply. Okay? Right? You won't be able to answer this question if you haven't mastered and understood what we include in cost of sales. Okay? So remember, I told you cost of sales, we only account for cost of sales when we have made a sale. Okay? So in this particular instance, when did we make a sale? We made a sale to Joe Smith on account, 15,000 exclusive of that. So we then say, before we even start playing around with that 15,000, we then say, what is our model? Because remember, that's the selling price. So we say cost, okay? And guys, this is why I say, please, just stick to the formula I've taught you. Just, unless you've mastered that thing, because you will just confuse yourself, okay? Because, and I won't be able to help you because those are things that are foreign to me that I haven't played around with, okay? But I can assure you, I have looked at other ways of doing this, and this has proven to be the simplest. And that's why I'm teaching you that, okay? So please stick to the stuff that I've taught you. That would be my advice. But again, I can't force you to do so, all right? The reason why I encourage that is I don't want to be seeing blanks, okay? When I'm now marking your scripts, okay? So here they told us markup on cost is 100%, all right? So we know cost is then obviously 100. Okay, here's something there since they said on cost, and therefore profit is also 100. Just want to see. All right, now people are getting it. Yes. Markup is 100. Yes, Litabo. Okay, 100% there, Kate Kani. And then yes, inventory. So yes, you've calculated the final answer. So this is gonna be 100. Just want to get the rest of us there. Okay, and this is gonna be 200. Okay. So what do we say? We know we have the selling price. The selling price is this 15,000 exclusive of VAT. Okay. So then we're saying, but we want this. We want cost. Okay. So what do we want? Tikani was saying, what do we want divided by what do we have? What do we have? We have selling price, which is 200. Then times what we have, rand amount, which is this 2,500. Sorry, which is this 15,000. Why am I getting 2,500? Okay, which is then giving us 7,500, which is what Oliver had calculated over there. Okay, can you see? You needed to come up with understanding that I now need to use my model, with understanding that I now need to use proportion. Oh, here I've put 2,000 for some reason. Okay, done. Okay. Oof, I also erased the line. Okay, right. So you need to understand, master, and apply. And then also, not only do you need to know how to use this, but you need to know which amount to use. Okay, we know that we only have cost of sales when we make a sale. So we know we have to use the 15,000, all right, and not anything else. Okay. Right. Inventory bought. Now you see here, Oliver. Excellent. I'm glad you picked up on this. You are throwing in inventory bought. Do we have cost of sales when inventory is bought, or do we have cost of sales only when there's a sale? You're also bringing in advertising. Remember when I showed you guys the cost of sales calculation? All right, let me pull out your textbook and show you. I think it's on page 75 in your textbook. I'm not so sure. Let me quickly check. Where is it? In unit 6. Okay, so in unit 6 on the inventory systems, on my textbook is page 185. All right, not a problem. We're here to learn, not a problem at all. Can you see it's the formula for cost of sales? Okay, you have your opening trading inventory plus your purchases less your purchases returns Can you see there? There's nothing about your advertising. All right. And also there's nothing that you're going to include in terms of entertainment. Okay. The Tabo, I'm so confused by your comment there. I think maybe save that question for when we meet face to face, because I know there's only so much you can communicate via text. So let's just save that one for when we see each other face to face, and then we can take care of what you are talking about. Okay. But again, so cost of sales only occurs whenever we make a sale. So we're only using the 15,000. We're not using any of those amounts. Okay. All right. Thank you so much, Letabo. All right, guys. So let me give you your break. Let me give you 15 minutes. So let me see you again at 11:27.
Sure.
Okay. Did someone want to say something? You can speak.
Yes. So we're just doing what on our sales, the cost of sales. We're not
100%.
adding on the purchases.
No, we're not adding the purchases.
Oh. Because on my book it says on the cost of sales equals to obviously purchases less returns.
So maybe let me do it this way. Let me explain it this way. Remember in the cash receipts journal?
Yeah.
In the cash receipts journal, when do we account for cost of sales?
Once the purchase has been made. Once we've sold.
Once we've sold 100%. And we do it based on the VAT exclusive amount of the sale, isn't?
Yeah.
So that's exactly what we also need to do here.
Okay.
Does that make sense?
Yeah.
All right, cool. One last thing just to add, Oliver, for the benefit of everyone as well. That 13,680, right? You might find that it wasn't all sold at that particular point in time when for this month. It hasn't been all sold in this month or this period, whatever period we're looking at. So if we then use that, it becomes a problem, because remember, cost of sales, we only account for cost of sales when we make the sale. And that's why we're not using it at this point in time. I hope that makes more sense. Okay. Awesome stuff. All right. Anyway, so let's call it in for now. Let me see you guys at 27 past. All right. Thanks for the thumbs up. All right. Glad to hear it. Thank you, Oliver. Now, let me see you guys at 27 past, and then we'll just proceed to do 2 other questions, and then we'll call it a day, and we will have finished 2015. All right. See you guys shortly.